Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
So things are looking good. You're looking at stocks at all-time highs again. I feel like a little bit of a broken record. We've been talking about how stuff looks pretty good. Just before we get to we're going to talk more about the Fed this week. But before we get to that, like, what are you seeing, in the economy and the markets over the last week?
I think the most important developments over the past week are with respect to trade deals. We've struck a trade deal with Japan, and there were headlines hitting this morning that suggested that the U.S. and the European Union are close to a deal that struck at like 15% tariffs on EU goods. And so, the market is viewing that favorably, and equities are generally trading well. I think getting through the EU and Japan and China, those are kind of our three largest trade partners, is an important step to kind of clearing the kind of market congestion about trade policy, because we had this upcoming August 1st deadline. And so, now that we're past that, it kind of seems like we're in summer complacency mode where data is good. Monetary policy is expected to be easy. Fiscal is highly supportive. And so the natural drift of stocks seems to be higher. And that's helping support crypto price action to a certain extent. But I really don't know if that's going to stop before we finish the summer. And so, I think the backdrop for risk looks pretty good. The risks to that view, I think most notably are with respect to Jerome Powell. Is he going to be staying on? Is he getting fired? I think some of those risks abated because, Trump said he wasn't going to let him go. But there's still a lot of chatter from Secretary Bessent about, reviewing the Fed, some chatter from Congress about, potential new legislation regulating the Fed. And so, there's still some of that in the backdrop. But ultimately, again, like those risks are probably constructive for BTC, gold, the short dollar trade, and nominal assets like equities. If the Fed's going to be much more aggressive cutting, if we're going to just broadly maintain easier monetary policy, that should be good for stocks, gold, Bitcoin, and the short dollar trade. So, even with the kind of risks out there, it's still a reasonably attractive time to be long risk assets.
Yep. And we've got earnings season upon us now. I mean, it's not completed yet, but have things look okay?
Things have looked just fine so far. But again, it's really hard to tell because the earnings game is one that I've just always so skeptical. Because if you look at, like, there's a page on Bloomberg, it's EA earnings analysis. And you can look at it for, a bunch of quarters. And essentially, like 60, 70, 80% of companies beat earnings expectations all the time. And I'm like, okay, so if you had a reasonable distribution of earnings, like, you would expect like 50% of companies to beat, not like 60, 70, and at times like, higher than that. And so there's a little bit of gamesmanship being played where, research analysts are kind of expected to keep earnings reasonable and meetable. And so, when you see those headline figures, they don't necessarily represent, the broader consensus. Those are just, numbers on a piece of paper that are kind of, set such that, these companies can look like they're doing well. So, I think right here, right now, the tariff uncertainty is going away. So you should see less chatter about tariff uncertainty in earnings calls. And that'll broadly be constructive. I think some of the, executive orders with respect to, AI are going to be received pretty well. And generally, like, you just have to think, like, there's trillions of dollars coming into the market from fiscal. So the backdrop is good. And if we don't have trade wars happening, like it just doesn't matter. as
Yeah.
much. Nothing ever happens, basically.
Nothing ever happens. Speaking of which, on Nothing Ever Happens, we talked a lot last week and during this segment about whether or not, well, not so much whether or not, but what would the impact be on the Fed, on the markets, on American monetary policy and economic policy if the president were to fire the chair of the Federal Reserve. Shortly after we recorded, Trump came out and said, I'm not going to do it, and denied that there had been a letter pre-written that some had seen and stuff like that. I saw just earlier today, we're recording on July 23rd. Earlier today, Secretary of the Treasury Scott Bessent said, I'm not sure where that question comes from. President Trump has repeatedly said he's not going to fire Chair Powell. He might like for him to resign, but he's not going to fire him. So it sounds like, at least in the interim here, the idea that the president would fire Chair Jay Powell, Fed Chair Jay Powell, is off the table. What's your sort of updated thoughts on this? Since Mohamed El-Arian, who used to run PIMCO, came out
Yeah,
and
he was at Allianz. I think he's still at Allianz.
Yeah, he said that he should resign in order to preserve Fed independence. There's a lot of conversation here about Fed independence and Jay and the president, and so I don't know where do we stand in your mind?
Yeah, I don't necessarily think that the Federal Reserve chair in the current economy is really that important from the standpoint of like he's the person setting policy. I think the market is far more important in terms of guiding, where Fed policy should be, from the standpoint that, if the Fed pursues an overly dovish path, right, you will see a reaction in the market. Like the dollar will sell off super aggressively. If we harm the credibility of the Fed in a meaningful way, again, the dollar will sell off, super aggressively. And that might mean less treasury buying, and so and equities might sell off really harshly to Powell getting fired. That's a certain possibility, but it all goes back to the point that the market is really going to drive the set of outcomes, right? If you see people stop buying the back end of the curve, the dollar selling off, like the Fed's not going to just continue to press policies that are leading to those outcomes. And so, if it's Warsh, Hassett, or Bessent, or whoever it ends up being, like they will take their cues from the market. And so, ultimately, I do kind of like see where El-Arian is coming from, partially from the standpoint that you know Powell is kind of too entangled in this like political back and forth between the administration and the Fed, and a new Fed chair, would have a term that outlasts the current president, and they're going to be kind of forced to abide, by the market, and so there is a reasonable argument to be made that Powell stepping down, might ultimately help the Fed's credibility at this point, because it's going to be hard for Trump to attack a Fed chairman that he just put in place, right? And if that Fed chairman is going to decide to pursue less easy monetary policy because that's the appropriate policy path, and that's what the market's kind of guiding him to do. Trump can't just go on Truth Social and be like, "Oh, this Fed president is stupid and is acting irrationally." Well, dude, you put him up there. And so there's an argument to be made that, Powell resigning, might actually help the Fed's credibility in a way.
Interesting. Let's have a little bit of a debate here, okay,
Sure.
about Fed independence as a broader topic. And I think we both agree. I know you've spoken eloquently about it on this show many times. I also agree that Jay Powell has been a very effective and a good Fed chair given the circumstances, which have been tricky. I mean, COVID was unprecedented, and but setting him in particular aside, I contend that Fed independence is un-American, and in fact, it's directly opposed to the Constitution. Article 1, Section 8 specifically delegates the power to coin money to the Congress. Now, Congress, of course, did redelegate the power, abdicate, I would argue, to the Fed in the Federal Reserve Act. But I'm happy to go into more of that argument. What's your reaction to that?
Yeah, I think the Fed needs to make decisions that are hard. They need to have the bandwidth to, sacrifice the short term good for the long term gain. And nothing about the U.S. political system, is conducive to that, right? Politicians base their decisions on election cycles, right? 2-year election cycles for congressmen, 6-year election cycles for senators, and basically, a normal president, especially a first-term president, they've got like essentially 2 years before they have to start running for reelection, and so that leads to like very populist outcomes. Versus like monetary policy, like you want the dollar to be around and strong for your kids and their kids. And so, I think the separation, that the Fed has and the independence that the Fed has is definitely warranted. And that's partially the reason why, like, up until, like when Trump came to power, right? Like the dollar was on this crazy strong path, right? Like euro was at 104, like, it was the perfect risk off hedge, high carry. The government can print as much as they wanted. And so it's been working just fine. With some blips along the way, but I would argue that the outcomes have been better than if the Fed was, a little bit more related to Congress and, had more regulations and less independent. Like, I think you've had better outcomes in this construct. Now, is it un-American? You could make that case. But has it led to much better outcomes? I would strongly argue that it has. And so I'm more in the camp that you keep Fed independence, you don't change the legislation around how the Fed operates. If it ain't broke, why fix it?
Yeah, I think that's a fair point. And I guess the question to me might not be independence. I love the idea of that in general. And you're totally right about the perverse incentives that our political system imposes on politicians today, and whether monetary policy should be in the hands of those
I mean, they're
incentives.
just not even experts. Like, you ask, like people talk about like 300 basis point cuts in interest rates, like they're nothing in Congress. They don't even like, some of them don't even understand. Like, I've seen people go on TV and be like, "Oh, the Fed should cut by 3 bips." I'm like, "Do you even understand what you're saying?" And so, like, I just don't think there's a technical know-how in Congress to regulate something so important. But you could make that argument for medicine or
And
for
other things that they do
AI.
regulate.
And
Yeah.
I would argue that if you had an independent board of like AI people that were about public service and were patriotic and were just trying to do good for the overall population, you might end up with better outcomes. Which is kind of what we have now with the Fed, right? Like, that's if you had like subject expertise people focused on that subject for the U.S. population, like you might get better outcomes.
I think that's a strong case. Let me just give a little bit of the sort of some history, some quotes from founding fathers here as to I suppose why it took until 1913 for a true central bank to emerge in the United States with the Federal Reserve Act. Thomas Jefferson, I believe that banking institutions are more dangerous to our liberties than standing armies. He also said the issuing power should be taken from the banks and restored to the people to whom it properly belongs. Now, some of this was in the context of Hamilton's creation of the First National Bank, which in my view was less about monetary policy and more about centralizing American state debt in order to get better credit,
Yeah, but I
which it
would
did
argue
do.
that Alexander Hamilton would definitely be pro-Fed.
Yeah, he would. No,
Like
he absolutely would.
100%.
Although I think, in my read of history is more that it was less about controlling monetary policy and more about centralizing American debt. But agreed, I think he would. I would say Washington was ambivalent. He did sign the charter for the first bank of the U.S., but only after deep consultation. Madison said history records that the money changers have used every form of abuse, intrigue, deceit, and violent means to maintain their control over governments. Obviously, Andrew Jackson, not a founding father, but often included, in this discussion, called them a den of vipers. I intend to root you out to bankers at a meeting during the Bank War of 1832. That doesn't matter. I'm not the type of person that says that, oh, well, 250 years ago, people said this, so that's how it should be. But I would point out that, coinage was a very important part of the founding of America and the liberty that the people wanted restored to themselves. Now, it is restored to themselves. Like I said, in Article 1, Section 8 of the Constitution grants it specifically to Congress, and Congress itself delegated it to the Federal Reserve and created it. I think my problem with the Fed is its lack of accountability overall, right? So even now, and actually have a monetary policy isn't even the main one that I don't like. It's bank supervision, which is not, we talk about their dual mandate of, in the context of monetary policy, of maximizing employment and minimizing inflation. It's really a triumvirate mandate, because they also supervise the banking system. But that's in a manner that I would argue is wholly redundant. You've got the FDIC, the OCC, state bank regulators, and in particular, when the Fed does things like what we have alleged, is called Operation Choke Point 2.0, right? No accountability for that. No, why should an unelected, unresponsive to congressional oversight agency have these powers, right? That where they are, I think the OCC and these other banking regulators that are much more, are much closer to the people's agency, are themselves, plenty effective than the Fed. Doesn't mean I don't think it's useful
on bank regulations. There's enough out there and enough agencies that do it. I'm in complete agreement there. But
then the last point, though, is only seven members of the Fed's board of governors are actually at all related to the power of the people. They're appointed by the president and confirmed by the Senate. They can't be removed from their posts. No decisions they make are subject to congressional oversight of any form. There is no comprehensive audit of decisions they make or why they make them, or accountability after the fact. So perhaps you could have some independence with maybe a lever or two more that gives them a little bit more accountability. Might be the sort of a middle ground that I would suggest.
Yeah, I mean, it's possible. But is the Supreme Court accountable?
Yeah, but they're a third branch of government in the Constitution. This is merely a pseudo-private, pseudo-public entity established, 110, 112 years ago. This creature from Jekyll Island.
How would you even hold them accountable? It's like, I can end your term early.
Well, you could have something like a Congressional Review Act, which requires a 2/3 majority to overrule, or some kind of. You could set some threshold for reviewing their decisions. I'm not. Don't get me wrong. I am very, very sympathetic to your argument about this U.S. Congress, modern U.S. Congress's capability of doing long-term decision making, which in many cases is unpopular. Very unlikely they would do a good job at that.
But I would argue that don't let perfect be the enemy of the good in this situation, right? There is probably a more perfect structure for the Fed, better regulations, get rid of banking supervision, have some more accountability. But that gets in the way of all of the good work that the Fed is likely to do, if it continues in the current construct. And so that's kind of my philosophy. Now, maybe that's insufficient because we're at a point in markets and in the debt and with fiscal spending where, we really need to have a Fed that is thinking, for the long run. But it's hard. It's hard. I'm on Team Powell. I'm on, keep the Fed independence, keep things as is. It's working just fine. But again, there's a lot of things I would want to do if I was in the Fed, right? I would, much more aggressively run off the balance sheet, for example. That would cause, long end bond yields to go up a ton, right? That would be super painful for anybody that's trying to buy a home or sell a home. But what would that do? That would probably incentivize Congress to spend much less money, right? But that's not going to be a palatable thing for a lot of people in the world. But that is probably the right thing to do.
Yeah, that would lead to pitchforks calling for Beimnet's removal of Fed chair, probably, right? I mean, that's it's so tricky. I hear you. I think, and by the way, I'm not sure that I'm actually in the camp of as particularly as it relates to monetary policy, actually removing the Fed's independence. But I do think, maybe not so much as it's been floated by the White House this go round, I do think it is reasonable for people to criticize and ask for changes at the Fed, generally speaking.
But I mean, have you seen Powell at these press conferences? He answers every single question, right? He has a very rational response and he analyzes the data. Going back to Janet Yellen before him, these guys are these Fed presidents. They're citing research. They're using models, right? They are constantly trying to improve themselves, right? They do Jackson Hole last year was about inflation targeting. Like, is 2% like a really effective target? Like, why are we still using that, right? So they're constantly trying to evolve and evaluate the decisions that they've made, and so like I don't think you can ask much more of them
Yep.
from that standpoint.
Two last quick points. One, one of the looked like groundwork had been being laid by the president's allies in Congress, and even the vice president, I think, had mentioned something about the cost of renovating the Federal Reserve's headquarters in Washington. Apparently, it's now exceeding $2.5 billion. It is a historic building. It's probably filled with asbestos and expensive things to remove. And last week you made the point that, well, sure, if you budget $500 million 10 years ago, surely just dollar depreciation alone means it ends up costing more. I do want to point out that the Fed's renovation project, the Fed's budget in general, is paid for by the Fed. It is not paid for by Congress. The Fed can pay for it from appreciation of securities it holds on its balance sheet, among other sources of its own money. So it seemed to me a particularly egregious reason to cite for removing the Fed share. It's their money. It's literally not the people's money.
Are we accounting for all the mark-to-market losses that they've had historically?
I'm not sure. That's a good point.
Buying like a ton of debt when rates were really zero, and
yeah, we should actually do that. How profitable has the Fed's investment truly been over its history? How much money have they lost?
Well, they hold to maturity a lot of times, and but yeah, surely interesting. I think that's a super valid point. But
and the last one, just for our audience, the poly market. Now, this would be if Trump were to announce a new Fed chair before December 31st, the end of the year. Currently, 22% is Kevin Warsh. Is he Council on Economic Advisors or one of those things? I can't remember if he's the National Economic Council or
National Economic is
Hassett.
Yeah.
So Warsh is in one of those advisory economic roles. Kevin Hassett is in another. Kevin's at 14%, so Warsh at 22%. Chris Waller, who's the current governor for payments at the Fed, who actually, in my upcoming interview with Nick Carter in a few minutes, we play a good clip from Governor Waller about stablecoins. So it goes Warsh at 22%, Waller at 17%, Hassett at 14%, and Bessent at 11%. And you made this point, like markets are probably going to drive monetary policy more than any individual. So it may not even matter.
It just won't. It just really won't. Like, 25 bips here, 50 bips there. Like, if inflation comes back, we're hiking, right? If the market responds super poorly on the FX side to those cuts, like, folks will be aware. And the Fed's going to get grilled why the dollar is depreciated another 10% after depreciating like 12-13% before that, and then you're going to be like, oh, the Fed, Trump's coming to power and the dollar's gone off by 25%. Like, that's not a good outcome. And so I really do think that the market will do some of that work, but at some point, I really want to double click on that stablecoin stuff that we've talked about. I think it's really interesting to think about, like, folks talking about like, oh, stablecoins launching, like that should mean a stronger dollar. That should mean faster velocity of money and more demand for U.S. dollars. But like fundamentally, like unless more dollars get printed, like just because you have a stable coin doesn't mean that there's going to be like more dollars out there, right? Like it's not like I think people are misunderstanding that, and now you're seeing like, oh, a lot of congressmen and officials are like, oh, that's going to lead to trillions of dollars in demand for dollars. Like, that's not how that works.
Yeah, is it going to just recycle the demand from elsewhere or whatever?
Like,
yeah, well, let's get into that. We've already gone pretty long, but let's have that debate too. Also, what it means for the future of commercial lending and bank deposits generally is a great question too. But we'll leave it here for now. A nice rip here with Beimnet Abebe, my friend from Galaxy Trading. Thank you so much.
Thank you for having me.